Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 27th of November, 2017, and I'm late. It's about 4:47 p.m. Central Standard Time. If I come to the boards, they're already erased. My fault. Been swamped today. A lot of things going on Monday. That's all I can tell you. All right. So when we look at a weekly chart of closes of gold, we're up today $7 to start the week off. Notice where the battleground is shaped. It's the 18-week moving average of closes. I call it MAC, moving average of closes, and that's where this battleground seems to all be about. Should the market be able to get up and close over this number, right through here, 1296.50 on the lead contract, well, that would all of a sudden make me take the arrows and put an arrow pointing up at 1268.50, one right here at 1274.10. I know this morning one of our research staff people came in, Ira, what are you thinking of the gold? And I said, if it doesn't hold 1300 today, you haven't accomplished a real lot. You're still going to be stuck against this key moving average, and that's exactly what's happening right now. When you go to the daily chart of closes, you can see how the market got itself up, closed at 1298.90. You'll say, well, that's close, and I say close as horseshoes. You still need to bust through that magical number. If you're watching Bitcoin as an example, what to get up to 9,800 or something. I didn't realize you could buy Bitcoin on some credit cards. I mean, you talk about a frenzy, it's here. It doesn't mean it has to break, but wow. In any case, here's the market moving, continuing its upthrust. When we go to a daily chart, you rallied right up to this last resistance point. It's pretty evident on the chart. Obviously, 1308, get through that, especially on a close. I think traders will look back and say, we have broken out to the upside. You haven't done that. So what you're doing is you're rallying into a resistance area. You do have a pattern of higher lows and higher highs. Now, just a couple of days ago, last week, I was pointing out to you how the market has to make a decision right here as to what it's trying to do. It has accomplished that. It set up an uptrend unless we quickly get back under 1289.50. Also, you're getting the 18-day average of closes rushing up rushing's not the right word, working up to try to get up to the 100-day average of closes to get the potential for what's called a bullish crossover. The crossover you had here was the 18-day got under the 100. You had a small amount of follow-through back down to the 200-day moving average where the market did hold. Now the question is, where's the resistance? And if you look at Bollinger Bands, these black dashed lines, you hit it. Today's high was 1303.40. That number's 1360. You hit it and it stopped the rally. The question now is, will this market be able to build on this and gradually arc up, or is the market going to fail here by getting under 1289.50, which could put you back to the 18-day average? But more important, you'd lose the momentum you've built in the market. And speaking of momentum, the problem is the market suddenly is overbought. Any reading over 70 on the oscillator called slow stochastics, I consider overbought. So we have an overbought market into resistance in an uptrend with upside bias. On the gold ETF, it's a similar pattern. You've got the pattern of higher lows, certainly the higher highs. In momentum, you're overbought here too with the 73 reading, and you're fighting at your resistance point, the upper Bollinger Band. In the GDX, the minor ETF, first thing, you're overbought. You are not trending in this market. You have a lower low and a higher high. What's stopping the rally is the combination of the green line, which is the 100-day average of closes, and the upper Bollinger Band. Certainly the bias is to the upside. Support is back at 2270. Unlike the other two metal, the gold that I showed, the futures and the GLD ETF, you can afford to pull back to the 18-day average and not do damage to the chart. But the question is the overbought conditions. There's two ways to alleviate an overbought condition. First is break. Second, keep going forward, converted from overbought to locking in what we call an embedded reading, where you take those numbers and they start going sideways over 80, which is often, not always, often accompanied by the market trying to move or moving higher. When I go to the D-gold, D-silver gold ratio, you can see how it's moving up. Gold is still in the December contracts favoring the silver. In other words, gold is stronger than silver. You can see the battleground in silver is right here at the 18-day average at 17.14. The trend right now is up. Today's high of 17.27 took out 2 days ago's high at 17.2550. So even if you broke through 17.03, you won't be in a downtrend, but you would ruin the uptrend. What I'd look for is if this market can clear today's high, 1736.80 is the 200-day average. It has been the nemesis of this. If this market can get up and close over that at some point, we'll have a different look to silver. Until that occurs, that's your boundary on the top side, and that's what I'd be nervous about. In the copper market, we're still hearing a lot of noise that China keeps slowing down. But you don't see that in this market. You see a flat market right now at around the 305.50 level. The market got itself up, if you take a look right here, hit the upper Bollinger Band, backed away. Looks like it wants to slip down to 312.85, found support. It is overbought, not trending. It's got a lower low and a higher high. No doubt it's got upside bias, but that's all you can say positive. Platinum got up to the 100-day average in green, the upper Bollinger Band, and hit a brick wall. It's got a pattern of a lower low and a higher high. Don't know what to do with that. Momentum is pointing upside, but it's already got a 70 reading. It's overbought. And the palladium continues to be the best looking of all the metals. It's got the higher lows, the higher highs. It pulls back, holds the 18-day average, and makes another run towards the upper Bollinger Band. Momentum is up, not in an overbought condition. And then the dollar index got hit again today. It managed to squeak out a close that got just back and over. If you take a look at the lower Bollinger Band, the question is, what does it do with that, if anything? And with the tax bills being strongly discussed this week and days flying by now, if they can't get something done in the Senate this week, there's questions as to whether or not, even if they passed it, can you get anything in a tax bill for this year, which is a big deal for President Trump. I want to remind you that we talk about our chart of the day, which features our price count. Let me explain what a price count is. Think of Fibonacci numbers, which is a way of measuring retracements or where a market might advance to, with swing line concepts. Once a trend sets in, where might it go if it sets in? How many legs to the downside? If it starts in off the bottom and we mark them in blue, where might it go to the upside? How do you determine the beginning leg of it? We teach it in PDFs to you. We give it to you in charting software as well, and we got videos on it. Call us. Go to our website. You can sign up for all this right there. You can click right up here if you're watching me on YouTube, or underneath us on many websites it says, click here for Ira's free information. You have a great day, and I'll see you tomorrow.